Let's start off first by talking about the medical expenses. This one is limited to 10,000 ringgit, covers yourself, spouse, or children suffering from a serious disease. But this has also been expanded for the year assessment of 2024 to include dental examination or treatment as long as it is done by registered dental practitioners. It is limited up to 1,000 ringgit claimable for yourself, spouse, or children. So it may be about time to get your teeth checked or send your children to get their teeth checked because this general treatment, right, applies to scalings, fillings, extraction, your checkups, right? All of this can be claimed up to 1,000 ringgit. And more clarification about the tax reliefs in general, okay? So as long as you are not the one paying for the expenses, most likely you cannot claim for the particular tax relief. So to give you an example, if Marvin has already claimed the medical expenses for critical illness from the insurance company, the full amount, can he still claim for tax relief for such a medical expense in his personal income tax or not? Well, the answer is no, because he is not the one that is making the full payment. The same goes to whether you are making payment for your parents or not. Applies to any tax relief in general. Okay, let's say this person's mother was injured at work and then SOCSO paid for her medical bill. Well, in this case, you as the son or the daughter, you won't be eligible to claim for tax reliefs because again, you are not the one paying for the expenses. However, let's say if this father, the operation fee is 30,000 ringgit, but the insurance coverage is only 12,000 ringgit, then the remaining balance, okay, this one you can claim if you're the son or you're the daughter. Okay, both son and daughter can also claim. Each person is limited up to 10,000 ringgit. This is the most updated amount. Okay, so just understand this. Okay, if you're not the one incurring the expenses, then most likely you cannot claim this particular tax relief. Okay, now another one, moving on to lifestyle reliefs. This one applies to yourself, spouse, or children. And there has been a lot of confusion about the personal computers, smartphones, and tablets. To be clear, this relief only applies to these three gadgets. Okay, meaning smartwatches, monitors, and keyboards, they cannot be claimed. Well, unless the keyboard or the monitor is part of a whole set. Yeah, you purchase a whole CPU inclusive of monitor, mouse, and keyboard. Well, in that case, that entire receipt will be eligible for this 2,500 ringgit tax relief. Then moving on over to sports relief, okay, for the year assessment of 2024, it has been expanded to include an additional 1,000 ringgit applicable to yourself, spouse, child, or parents on sports. It applies to sports equipment, whether it's shuttlecocks, golf balls, etc. Your entry, rental fees for sports facilities. Let's say you go to play badminton with your parents every week, right? All these court fees can be claimed under this sports relief. You're limited to 1,000 ringgit. Registration fees for sports competition, gym membership fees, as well as sports training fees. Now, when it comes to this relief, right, the sports has to be a listed activity in the 1997 Sports Development Act. This one has been recently updated to include 103 different types of sports. So as long as your sport is listed in this act, then most likely the majority of the reliefs you can claim. I say most likely because at the end of the day, when it comes to, let's say, sports training fees, Hanayo said that this one will have to be conducted by a coach, club, or company that is registered with the sports commissioner. But it applies to one-off sessions or a series of training sessions, whether it's a regular badminton classes or one-time gym training, right? Most likely they can be claimed, but it must be registered with a sports commissioner. So make sure it is listed in the 1997 Act. Yeah, Pilates is currently not listed, at least I don't see it in the list. Okay, so I'm leaning towards a no. More clarification about what equipment you can claim and what you cannot claim. So running is a sport, right? It's considered as a fitness sport. Therefore, treadmills can be claimed. Yeah, weightlifting is also a sport. Dumbbells, barbells, they can be claimed. Golf balls, shuttlecocks, badminton rackets, pickleball paddles. Yeah, pickleball is also a listed sport. So these can be claimed, including bicycles as well. Now, when it comes to what you cannot claim, Sports attire, that one you definitely cannot. Sports shoes, your Adidas shoes, your Nike shoes, swimsuits. Yeah, a lot of people are asking, how am I going to swim without a swimsuit? Well, that's up to LHDN's discretion. They have already stated you cannot claim sports attire. Yeah, this includes jerseys, sports shirts, as well as pants, and finally, motorized bicycles. Okay, so now all of this information tonight, I didn't make this all up. It's based on a reliable tax advising website. Okay, yycadvisors.com. You guys can refer to it. And let's move on over to EPF, voluntary contributions to EPF and PRS, because both of them offer a similar relief. Which one should I max out first? Personally, based on the numbers, I will max out EPF first, because why? Both of these options, they help you save for retirement, but they have one big difference. And it is EPF, they don't charge any fees. And what you see is what you get. There are no sales charges, there are no management fees. If EPF this year declares a 6% dividend, you will get 6,000 ringgit if you have saved up 100,000 ringgit in your account. But when it comes to PRS, right, there are a lot of different types of fees. Yeah, some of the fees can be waived, but annual management fee, annual trustee fee, this one definitely cannot be waived. This one will range from about 1% to 1.8% per annum, depending on how aggressive your funds is, which at the end of the day will eat into your profits over the long term. And more importantly, PRS funds, they tend to underperform, because I've looked at the 20 to 30 PRS funds over the week, right? And so far, none of them have beaten EPF's annual return of 5.52%. You just take a look at these two funds. These two are growth funds, so you typically expect them to give you like an 8 to 10% return. However, this fund in the past 10 years has only netted a 2.05% return per year. Okay, whereas this fund in the past 5 years only give you 2% return per year. So if you're like investing in this for the past 5 to 10 years, you would have lost money to inflation, averaging at 2.5 to 3% per year. And also not to mention negative performance. Now, this one is also another big factor, right? When you're investing in PRS, in some years, the fund can underperform. Like this example over here, 2022, the calendar year return is negative 17%. Whereas EPF, yeah, we tend to take it for granted, but EPF's returns have been positive, ever since probably its founder, which is why it is quite an attractive option if you're planning to, sort of like invest for long term. But some people are saying that, oh, what if I invest in PRS for tax relief? That makes it worth it, right? Well, you got to think again. Let's say your current tax bracket is 10%. Okay, assuming you invest 3K, 10% out of 3K, that's 300 ringgit. You use that additional bonus to top up your PRS. So you start with 3.3K. If PRS returns are 4%, the fund that you chose, you might as well just invest it in EPF without any tax relief 3K. Because over 20 years, you will have significantly more returns. Now, let's say what if your tax bracket is high, let's say 20%, right? In this case, let's do the math again. Your initial capital is 3,600 ringgit. But over 20 years, EPF still beats out. Okay, which is why today, anybody, if you guys are investing in PRS, on Monday, call up your agent, double check the fund's prospectus, make sure it at least beats inflation. Or better yet, it beats EPF's annual return. Otherwise, I've shown you guys the math already. It makes no sense for you to quote unquote max out your PRS just for the sake of tax reliefs. But if you still want to max out, then there is a good measure recommended by Ringgit Plus founder Han Liu. So he said that very few PRS funds they have been able to beat EPF over a 5 to 10 year period, but that's because mainly due to their fees. If you must do it for the tax relief, choose a growth focused one. There's no sense for you to put in a conservative one. Next, your tax rate should be 55 minus your age. Yeah, so let's say you're currently 28. You take 55 minus 28, your tax bracket should be 27%. In this case, if you want to max out your PRS at this age, right, you should earn somewhere between 600,000 to 700,000 ringgit annually. Right? So, moral of the story is, well, it doesn't really make a lot of sense lah if you are trying to maximize PRS, especially long-term wise, majority of the PRS funds, they tend to underperform. I want to elaborate more about what Han is trying to say here. Why 55 minus your age, check your tax bracket to see whether it's worth it to invest in PRS or not. Because let's say you're currently 1 to 2 years away from retirement. Let's say you're 54 or maybe even 53, lah, okay? And then your tax bracket is, say, quite high, say maybe 20%. In this case, it's basically a no-brainer for you to invest in PRS because you can get the 20% bonus and then withdraw it in the next 1 to 2 years. However, if you are like 20, 30 years away from retirement, even though you're in a higher tax bracket, I've shown you guys the math over here, right? Long-term wise, if PRS returns are just slightly lower than EPF, right? EPF will always beat PRS over the long term. Next one is SSPN better than PRS? Well, this one you have to check how much SSPN actually pays every year. And so far, I think it's about 4%, okay? And you have two options, right? Actually, a few options. You can put your kids' savings to ASB, ASM. If you're Bumi Putra, you can put into ASB, or you can put it to SSPN, get that 8,000 ringgit tax relief, right? And in that case, see whether it's worth it or not. So you can put here, right, what's your initial amount? Let's say you're doing it, you maximize it for the 8,000 ringgit tax relief. So, and your, let's say your current tax bracket is maybe 10%. So you put 8,800 ringgit because 10% of 8,000 ringgit is 800 ringgit, right? Then monthly contribution 0. Then your length of time, maybe let's put 15 years, okay? Because you save up for your children's education. Estimated interest rate, well, we agreed it's 4%, right? So we just put 4% over here. A compound frequency, you just set it to daily. And then you can calculate. You can see in 15 years how much you will have. Then you just repeat this calculation for ASB or perhaps ASM. So ASB, they pay about 5% per year. It's a 1% higher compared to SSPN's 4%. So let's repeat this calculation. But ASB doesn't offer you any tax relief. Let's say you just contribute the same amount, like 8,000 ringgit, but without the tax relief, right? So you don't get that additional 10% boost. Okay, so 0 monthly contribution, length of time, let's say 15 years, estimate interest rate, let's say 5%, and then you put the compounding to daily as well. In this case, you can see, right? ASB gives you almost 17,000 ringgit, whereas SSPN gives you 16,000 ringgit. So over the long term, you can see, right? If there is like a 1 to 2% deviation in return, right? Even if you get like a 10% tax break, well, you got to think about it again. Okay, so hopefully this gives you a good idea on whether purposely investing in SSPN is worth it just for the tax relief or not, rather than just, putting it manually into ASB, get 5% every year without the tax relief. Shout out to all our gatherer members: CH, Andrew, Wendy, Alex, CC, Urshad, Caveman, Kelvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Bookman, Will, Jack, YC, Arif, Haziq, Jinden, Adam, Ashley, Sean, Jason, Putra, Alvin, Jiachen, Aldrin, Chai Wei, and Fahmi, as well as all of our learner members. Really, thank you all so much for your support. All right, guys. Good night. Stay safe.